Joining us right now is Potomac Wealth Advisors founder and president Mark Avalon. Mark, good to see you. Would you buy into this market this morning?
I'd wait and see what happens a little bit more with these tactics that we're seeing either from the Fed or from the president in the bank meeting tomorrow. I think the market's reaction is part program trading, that we have good news. We need to correct yesterday's perhaps oversold position. But look, until the severity of this virus is understood, how it's communicated, what its true fatality rate is, until these things are known, travel will be suppressed, conferences will be canceled, business meetings will be canceled, and the residual effects of that are far more than just a hotel room or an airline seat. It affects, when a conference is canceled, it affects local florists, security guards, sign makers, food providers. The wait staff doesn't get to go to work. And I don't think we've seen the true trickle effect on the economy from all of these cancellations, and that's what concerns me a little bit right now.
Yeah, I think you make a really good point. I think once we get the expectations straight, whatever they are, Wall Street investors will have more clarity and will feel comfortable investing in this market. But at this point, Scott, you just don't know where this is going. You don't know what kind of an economic impact this is actually going to have. So when you don't know?
Well, the market's trading like it's a big one, Maria. And Mark, you mentioned program trading. What have you seen on your end with respect to the program trades that have come in on especially these down days and how that's exacerbated some of these big moves?
Well, I think they're driven by fear right now. Any bit of bad news that crosses the wire sets a trigger. I think the fear is that we're in for a 2008 situation, especially when you see the weakness in banks. Then people start to question the fundamentals of the financial system. And look, they have a reason to worry a little bit, at least, about the banks. Look, in a very flat, low, and no yield curve to speak of, we're also seeing banks get hit. They're not going to benefit from the rise in asset management fees, which has been a quiet source of earnings for many of the large financial institutions. You have some default risk, and their trading desks or the M&A operations are not getting revenue because deals have come to a standstill. So when you see a weakness in the financial system, that sends a lot of worry, and that's why I think you're seeing these reactions. Why did the Fed lower by 50 basis points? Why is the president calling the bankers into this meeting? Is because we want to stem that fear as quickly and swiftly as possible.
Let me ask you about the level of interest rates. Does it bother you where we are in the 10-year, the 30-year, the 2-year? I mean, the level of interest rates where we are now, there are expectations that the Fed is going to cut 50 basis points before this actual meeting, which happens on March 17th. Do you expect another cut?
Well, I think they will cut. I'm not sure they'll do 50 because it leaves them so little after that. But if they cut even a quarter, I'm not sure how that's going to help with this fear factor. It's not going to put people onto planes, and it's not going to help people spend. Look, what's been driving this rally is the consumer confidence, great job numbers, wage increases, and consumer confidence then spends money. The Fed cutting rates is not going to help consumer confidence. People are starting to hunker down. I think we're going to see lower consumer spending against this backdrop of uncertainty. I think the Fed has made a bold statement. I think if they go back in with another 50 basis point cut, it could almost look a bit alarmist at this point.
Yeah, I mean, it could be like they know something, a lot worse than we do right before a meeting, and maybe markets react negatively to that. We'll see about that. Mark, it's good to see you. Thank you.
Good to be here.
Mark Avalon joining us there.